The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. And checking things out for you, looking at where everything's at right now. We got the market, the S&P is currently up a whole 5.7 points, so not up a massive move right there. We'll go back and we'll look at everything step by step. But right now we got the NASDAQ up 9, and the Russell looks like it's down about a point on the day. Dow's currently up about 64 points. Gold is currently up $5. We got silver up 2%, so just a nice monster move on silver right there. We got copper is, it's pretty much flat. Down a couple ticks there. We got oil up 19 whole cents. So obviously there's some volatility in between, but just as of settlement of yesterday. Natural gas is moving and shaking as always, currently down 3.5%. We got corn is flat on the day. Looking over at soybeans, it's up about 4 points right now. We got the euro dollar is up 18. We got the pound dollar up 4. Aussie dollar currently down 16. Euro yen down 1. US yen down 15 on the day. And the pound yen is down 38 with the dollar CAD down 3 and the dollar franc down 5 pips on the day. All right, well, that gets us caught up right there. And I want to go through real quick with you and look over the news and go into a few different things. But let's go ahead and do a quick recap, a review. And Tiger TV there, I think I'm going to go ahead and do a quick update on the screen resolution, make it a little easier for you to see. So that way you can view my screen a little better. I know sometimes if it doesn't have the right resolution, it'll look a little weird and fuzzy. Okay, so getting that updated, you ought to be able to see that here in just a second. And pushing that back up for you. So give me 1 second here. There you go. Should show and be pushed on over. Okay. Got that in there now. Now that'll be a lot easier to see versus all squished up and small. Let's go ahead and check out where we're at on the news that's been coming out. Now, there hasn't been, these aren't necessarily the biggest news trades. I talked about those yesterday. I was going through them with you, and I was listing them off. But I was also talking about, using caution on some of these trades as they were coming out today. And but let's go ahead and look at them regardless, just so, you can have an idea on how to put everything together. And there we go. All right. So this morning we had the pound dollar. So I'll bring up a pound dollar chart for you. And we can look here and see that this morning, 428, the PMI was coming out. And the actual versus the forecast on the PMI, we had a 59.1 release with a 58.3 expectation on the PMI release this morning. And that really wasn't a big difference, but we got a good move. So if we get bigger than a lot of the moves I'm looking for, then we expect an even larger than average move. But let's go into it because there's a couple things that I noticed on this report that I thought would just be good to go over. One, a lot of times people see the release as being 430, and it's actually 428. Okay, and so you want to be aware of that, and that it can start a couple minutes early. Well, why does my website say 430 or whatever? Well, because you have to have a Reuters data feed, whether directly through Reuters or a lot of times through a lot of platforms will actually have the Reuters data feed and feed them in for you. Also, or you can pay for that, or you can subscribe to it. Bloomberg terminals, of course, that's more extreme than what most traders are using. as far as retail traders go. But just be aware that the report does come out a little bit earlier. And I'm just backing down to 1 minute over here just so we can see the detail on the report. But you can see how it actually, see the movement right there. Look at that big movement right there at 429. Okay? So a lot of people think it's 430, but there's this big spike. And so if somebody goes in and they have like these buy and sell orders, like I've seen people do like on FX or on the S&P futures. I even tried this at one point, where I was doing an OCO with an OCO where I had to buy above the market when it has so many ticks off and sell below the market. If one got filled, it canceled the other, and then it set my take profit stop loss. And so they'll have those orders. Sometimes they have them set too early, and it pops up, pops down, and hits both sides. So just be aware that that does happen. And then let's look at the movement. So from the release. And so go in here and our move down. I'm going to have to actually grab this and shrink it a little bit because I got 1 minute bars. Had to get down to 1 minute because of the 428 there. And here we go. Okay. So our move down between 4:30 and 7 was, pretty small. We didn't really get into a massive drop. And that's what I wanted to show you on the report. But if we go in and we look at our high to low, okay, over here, we got 76. So maybe a little less than that. May have been drawn that a little liberally there, but about, 74, 76, whatever. Okay, so what does that mean to you? Well, whenever I quote the ranges, okay, one of the things I'll say is this is the expected range of the movement, and the expectation was 75 pips, okay, on the pound yen, and it was 60 pips on the pound dollar. That expected range is not from open to high or open to low. It's from high to low. A lot of times the market will just go straight up, or the market will just go straight down. Or the market will go up a little bit and then mainly move down, or go down a little bit and then mainly move up. Okay? So you just need to be account for that, so that way if you see like a spike like that, that you're taking that into account for counting your 70 pips, and you're like, you know what? I'm probably going to need to get out of this thing at, going for break even on this trade. Simply because I already got my 70 expected pips out of the trade. And so that's just one of the things I think people easily can miss, is that range that happens on that news that we expect, and they don't account for high to low. So make sure you're doing that. And it actually did hit its range. So it broke the 50 pips, that'll actually bring our percentages up. And it actually broke the 60 pip average on pound dollar. So it did what it was supposed to do. It just it did it with a big pop up first, which was really just a fake out, a stop out, about 43 pips right there. Now if you had your trade on, depending on what your take profit was, maybe you could have taken profit. That was pretty fast. That was like a minute. It was up, and it took a minute for it to get all the way up there. It closed out at the top, and then it just gave up 20 pips like on the next second. So if your take profits were sitting there, also that would have affected you. But I want to walk you through just those warning things, just to remember, count that high to low. That's why I love the little ruler tab here over on NinjaTrader, because it lets me easily measure market movement. I know most platforms have something like that. It's just the one I'm most familiar with as far as doing range counts. And then if I go over here and we'll look at the pound yen along with it, and we'll go back and look at deviations and stuff, but right now I just want to focus on the news release and see what we got. And see, we got that same big pop up, and now we got a better pop down, but we got a pop up right there, about 40 pips, and then our move down, make sure I get accuracy, so I'm including everything to 7. Okay. Here we go. Make sure we got that. Okay, now so our move down from release. And why do I keep saying from release? Well, because that's probably about when you got in the trade, somewhere around that time. And Let's see. There we go. So we got about 68 pips down, which is good. You definitely would have been profitable on that trade. You shouldn't have any problem being profitable in that pound yen. And that, I remember I said that was the preferred currency pair on the news report. We got 112 pips total move off the news. Now, depending upon when you got in, you know, who knows? You may have, like, if you got in earlier, like, sometimes what I'll do is I'll get on these trades literally like at 11 o'clock at night, okay? Because it'll be 7 p.m. expiration. So if you got in around 11 or 12 o'clock, you know, way up here, I mean, you may have taken profit before it even ever got there, okay, before the news even came out. I'll set trades on, and I'll set my take profits, and I'll go to sweep. Now, I'm doing, you know, that sounds crazy, unless you understand that I'm trading Nadex. I'm trading Nadex spreads, and I have capped risk. And so I can only lose, say, $20 a contract on my buy. I can only lose $20 a contract on my sell. I don't have any stop loss, no matter how far it goes against me. I can't get stopped out on the trade, and I set my take profit. It's just a, you know, it's a straddle. It's like a call put straddle, except for I'm getting to take advantage of only having 7 hours till expiration. Or 2 hours till expiration, you know, or 1 hour till expiration, depending on what trade you're doing, versus having to have 5 days or 14 days or 30 days till expiration. So, which means I'm not paying for massive premium. I'm getting massive delta. My GAM is throwing this thing through the roof. I'm going to be at delta 1 within a matter of ticks, not a matter of, you know, like 100 tick moves. So, anyways, so yeah, you could easily take a profit on that. Let's look at the pound dollar, because I didn't really look at that on that one. I was on the pound yen. But on the pound dollar, you might have also, yeah, you had that descent. So, you know, you're probably about break even if you got in right before it. But if you've been, you know, if you're somebody who doesn't like to stay up or get up at 4:30, and you put this trade on back here around midnight, I mean, you definitely got the move. So you definitely took profit on that trade, and that would have worked out for you. I mean, that was 70 pips right there. So that should have been more than sufficient for you to have taken profit on that trade. And so it would have worked out okay. Anyways, I just want to lay out, you know, a couple things. Is one, on those pound reports, when I talk about them, don't think you have to be up at 4:30. I don't know. What? Some nights I'm up till like 3 or 4. But it's, you know, not often, fortunately. But I'm usually not doing it because of trading. I'm doing it from other stuff. And going in and, you know, working on analysis of software and working with other traders, but if you, that are, you know, in different markets, different time zones. But if you want to go in, I don't usually stay up to trade that late. And if I was going to do that, I would just rather, you know, go to sleep early and get up like at 3 and trade the European session. But I'll put these trades on, like I said, 11 o'clock midnight, set them, forget them, wake up, and as long as there was, you know, a decent movement on pound dollar, which is not rare, then trade profits. All right, stay right there. We'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so, again, just going through and putting together the pieces, understanding the expectations, the statistics. That's part of diagnostic trading. And diagnostic trading is looking at technicals. It is looking at fundamentals. It is looking at statistics. And to give you an edge in the market, because the way you want to look at them is how do other traders look at them? How can I take advantage of that? Okay? If statistically the market's going to go this far and usually bounce off that level, then I probably need to tighten up my orders. And so to some simple things like that, fundamentals. When are the traders going to traders on average going to actually place trades? Where are those markets going to turn around? Think of it sort of like fib levels, or think of it like pivot points, but better. For example, one deviation. And this is based on implied volatility. We post these inside the scanner. They're available on TFNN. And the deviation levels are fantastic. They actually go in and they pull the implied volatility, the expected movement, out of the options market. So think of it like as a survey of money. A survey where people say, how far do you think the market's going to move? But they actually have to put their money where their mouth is. That's what implied volatility is, okay? It's how much people are willing to pay in premium for an option based on the expectation of movement. So take that, you get an insanely accurate representation. And he said right here, here's a deviation move on pound dollar. And look at what it did. It came down to 1 deviation. And that's what we expect. Most days we expect a 1 deviation move. And not only did we get a 1 deviation move, we got a 1 deviation retracement. So we had a perfect short, 1 deviation fully down, clean trend all the way down. And this is with news in the middle of it. And we got a 1 deviation move back up, all the way back up. And guess where we're at right now? We're at settlement. It's like nothing's happened. But the market moved the exact expectation, top to bottom. And I don't know about you, but if you can look at this, you ought to be able to see that there are some edges this gives you in trading and understanding expectation of movement. Because I know as a trader, you look at a trend and you're like, should I get in? Did I miss it already? Is it over? Am I too late? Well, this lets you know if you're too late. This lets you know if you shouldn't be getting in. This lets you know if you should be tightening up your stops. Because, you know what, you touch the deviation level. You better tighten that stop up. Okay? And you know, the 0.5 is good, the 0.7 is good, the 1, that's huge. The 1 high to low, that's huge. So 1 retracement, that's huge. So like right now, I'm in a trade, I'm definitely tightening my stops up. If I haven't already tightened them, because we just made a 1 full deviation retracement. So there's no reason to not be tightening up your stops. And it's not like we just pull 1 implied volatility. We pull this across the board. Now, some markets, of course, are going to be a little more volatile than others. One of my favorite markets is pound yen because it's insanely volatile. But it's not insanely choppy. It trends really well. And see, we moved down to 1 deviation. Check it out. We moved down to 1 deviation. We were there about 3 a.m., pretty much on the, British, European Open session right there. And it stayed there, which makes sense that it didn't move until the news came out. And then once the news came out and it was negative on the pound fell. How far did it go? 1 deviation down. And then when it finally did turn back around in this morning's U.S. session, what happened? It moved back up 1 deviation. And then it went flat for a couple hours. And now it's starting to move back up, seeing if it can get back up 1 more deviation. But easy target points across the board. There's a lot of levels. Silver's been going insanely nuts. Let's see. Let's go here and look at silver. And I'll pull that up. And so silver, look at this. Look at this perfect spike. 3 deviation move happening today. And this same trade, by the way, if you didn't catch this, you totally missed out. This same trade setup happened 2 days ago. I'm going to show it to you. I'm going to show you how it happened 2 days ago as well. And let me add volume on here just so you can see what I'm talking about. I have a volume spike on there, but just to let you actually see the physical volume. All right, so we have this, large volume bar. I'll mark that so we can see it in reference when I go back and show you. 2 days ago, the exact same trade. We have this massive volume spike. And what does it do? It goes right back down. We'll talk about this when we get back. But this is a very cool trade that there's some pretty cool ways to make money with it. We'll talk about how you can do it with low risk. Stay right there. We'll be back right after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're going back here to the Diagnostic Trading Hour. And we said just looking at a few different things, but going through and looking at this silver setup trade that we had. And on this trade right here, if I can get the information up that I want to see. So on this trade, what we got is we had the massive volume spike going on. And when the volume spike happened, you can see the very apparent volume bar. It's not like it's hidden. And what happens? It's a magnet bar. It's going to go back. Bar closes, boom. You know it's a volume spike. By the close of this bar, you know it's done. Okay? And you're heading back down. And then you get, a nice move back on silver. Eventually, you get another volume spike. Now, it doesn't break the high, nothing like that, so you don't necessarily have a reversal. You could go for a reversal. But, you're talking a nice, profitable trade. Low risk. You could have done spreads. Not a big fan of spreads on Nadex as far as silver goes because they're too wide in how they tick. They're great if you're a new trader, if you're a smaller trader, trying to, not really make or lose a lot, but you want to have a little skin in the game, not just demo trade. So there's an advantage on doing that. But beyond that, really just, not worth messing with for if you're actually trading in volume. But the binaries are great. And you go in, like I went in, I sold some at 86, targeting the strike basically right at the low of this magnet price. and it came right down, nailed it, bought back at 57. And, that was what I was talking about as well on Monday. Same setup. Let's go look at it, okay? Let's go back here. And it's really good if you don't have this practice already on especially your 10-minute bars, or if you're a daily trader. I wouldn't go anything lower than 10 minutes for doing this on the volume. But, 10-minute, 60-minute, 4-hour, daily, whatever you trade, it's a really good practice to go in and mark up, high volume bars with horizontal lines. A lot of times we get used to just drawing up here at the top. But I'll also mark, these bars, like at these levels. And it lets me to see relative what is a high volume day. And so if I want to go in and I'll load, say, the last 20 days here on silver. And this is probably honestly silver is a pretty crazy instrument overall to trade. But this is one of the few ways that I actually like trading. And I'll go back and I'll just find where were high volume bars. And there's not necessarily just a ton of those. And, they'll be in relation to each other. But you can see what is a high volume bar relative across the board. And, there's another one right there. And so that way you just sort of see what is a high volume bar. And that's what you want to be able to define. And one of the best ways to do it that I highly suggest is if you have, now you'll have to go back to live when you do this. But if you use a Ninja, now if you use a Thinkorswim, it'll do it for you, which is pretty cool. But if you use a Ninja, do SI like pound dash pound. That way you get the rollover, because obviously silver's rolling over. If you're looking back at trying to find high volume bars, you may not really get the bar you need to be looking at. See, that changes the whole picture right there. So to make it even easier to see, what I'm going to do is I'm going to just bring this way up here. And then here, I'll delete these lines. There we go. Okay, so we got that one right there from today. And we go back. Look, there's about the same level. Okay, this is the one I was talking about previously. And then we go back, and we just go back and see, what other day can I see a similar high volume mark? Now, obviously, I wouldn't know that was a high volume mark because I would have lower volume marks on the trade. So say like this to me was a high volume mark right here at 3,000 contracts. So getting 4,000 contracts in a single 10-minute period on silver, that's significant. Okay, and so I can mark that level like right there, and these become magnet prices. And I wanted to scroll through, look at the last 20 days, or you can even go further back. You'll have to go further back sometimes because you'll need to find like magnets above where the market is, magnets below where the market is. But by having those different magnet prices, I then can use that knowledge to my advantage, such as when I see a magnet happen, then I can place the retracement trade. Such as today, you could have went in, and when you got the big volume spike right over here, or this is Monday, when you do that. Now remember I said you have to switch back and forth, so now I'm going to go back over to silver, and on the silver contract here, let's see, I want to make sure I do have the right one up. Give me 1 second. And so silver for March. So, SI 03-14 or SI H4, if you're using, say, Thinkorswim. But I can look at all these different volume levels, and I go, okay, boom, spike bar, retracement back to magnet price. There we go. If it was going to keep going, if it broke that with volume, it didn't break it. If it was going to keep going, it'd go back to the last magnet. And if it kept going, guess what? It'd go down to this big magnet down here. That's going to be the next big breaking point. Will be down to 19. So if we get a strong volume close, okay, a high volume, we're talking, 5 to 5,000 plus contracts on a 10-minute bar that goes down and closes below 19.9, then we're moving down to 19. So just waiting for that one. Obviously, you're not going to get all the price, but let's say it goes down and it's at 19.6 or 19.5 when it happens. Then you can target 19 because that's where it's going next. It's going to that next magnet. And we go over here, And by the way, you can also plot them at the highs and the lows of these massive bars, like that. We go back, we look at this last one that we had. And right there we go. Starts giving a lot of pink lines on there, right? But, so we go and look at this and check this out. So I'm going to draw, this is what I showed you Monday. So we have that magnet price there. We have that magnet price there, okay? So big volume spike, and it spikes up. I mean, you got 5, 10, 15, all three are massive volume spikes. Closes down, boom, guess what? I'm targeting this magnet, the low of this bar. We go in again, and we're watching. It's just awesome. I mean, that's basically, that has now not only become a magnet price, it is a support line. See that? It's bouncing off of it. Bouncing off of it. We're going on hours right now, but, it's bouncing off this level. It's trying to move up. Comes on back down. What's it do again? It bounces off of it. Bounces off of it again. Keeps bouncing. Like, when I'm saying bounce, think magnet. Being pulled back to. Over and over. Okay? So, keeps bouncing, and I basically expect it to bounce back and forth between here and here. So, I could swing trade for half of it. I could get in the middle. I could do strangles. And there's a lot of things I can do. Okay? So, every time it hits the bottom, I could buy up and take off at half. I mean, I don't know if it's going to get all the way to the top. Okay? We didn't have big volume move yet. So, I'm watching, going back up, and almost reaches it. I mean, almost right there. But, you get up there, then it starts pulling back down. Starts bouncing off this level. See that? Okay, so now we're doing a magnet on the top level here. And then it busts through it with volume. Look at that, right there. Just pow. Okay, right through it. Strong volume. Goes up. It makes a new magnet price up at 20.36 there. And then, where does it come back down to? To the low of that bar, which is also a magnet. It's like a magnet range. It goes right back down, bam, right to it. And guess what? Now we're just playing resistance support right here. Just boom, boom, boom. And we'll do that for a long time. So, if you'll learn, I mean, I hope you see how simple this is. I'm 10-minute bars, volume, high and low a bar. Go back, track the last few, make sure you have a couple above, a couple below, and now you're looking for when it busts through, where's it going next? And if it starts bouncing off of that, it comes back to it, you can start playing. You see that happening, you can obviously easily play a very tight stop, trade, or you could do something like trade a binary, a spread, or whatever, at the money spread, or a low risk binary, or but low risk. Like I said, you could do the spreads. Just they're very small, but if you're new, this is a good way to start. Now, if you do, you can do this on other instruments too. You can do this on the Russell. You can do this on the the yen. So you can do it on a lot of different instruments. It's just a really simple one. It's really easy to see right there on silver, and it's actually pretty easy to see on most markets. We go over. We can look at gold, and let's see, gold. We ought to be rolled on over now too here to April. So gold now, we're on April. And we'll probably want to go in. We're going to want to put in a few things. But one is we've obviously established a magnet high price here. I got to get rid of, these drawings now. These are from the silver chart. Okay. So get that over and go, hey, is that a high volume gold bar? Okay. So first I just want to know, is that a high volume gold bar? It sounds funny, but high volume is relative. And so I'll go in and I'll do that whole GC pound dash, pound on there. And I'll refocus my chart there. And now we're going to back way up and start looking for what is a high volume bar on gold. So obviously that's a high volume bar. That one's pretty big right there. So we had a lot of volume up here. And then it looks like a standard high volume bar is about at this level. Right here, about 6,900 contracts on 10 minutes on gold. So over the period of about a week there, maybe even a little lower, you could probably even bring that down just a little bit. Maybe down to 5,000 contracts. Should be considered a pretty high volume amount. You'll have some that, of course, obviously will exceed that level. So now I know what a high volume bar is. And now I can go back and I can pull up those charts in detail. And I can start establishing, magnet prices on them. And then start using those magnet prices as target zones. And so if I go back in here and I'm like, okay, well, so that was high volume right here. So our strongest magnet, of course, being to the downside, but we also have an expectation of that pullback right there. So there's a magnet range. And I go over here and go, okay, here's another one. And you'll start seeing you'll get some confluence going on, okay? They'll get sort of thick right there. So like a definite range. We'll go over, keep going back. And you got there. You have literally another one right here, which also happens to be like right at this level. So we go back a little further. Some days, nothing significant's happening. So here we're getting a couple levels. And now this will get ridiculous at a certain point. So now you're not going to go backwards like this all day long. This is just a sort of a practice thing, okay? So we definitely established some decent ranges. Now what we do is just go back in, and now let's just look at the current contract, okay? And then we'll go over here, and now look at what's happening. Okay, it busts up, it hits this level, it comes on down. So it's sort of like a deviation, but it's a volume deviation. And what I really like is when they come together. So when they're really close, obviously in a confluence of volume deviations, or not volume, but really volume pivots and deviation levels. And you can throw fibs on top of this. I mean, if you want to really start getting a lot of horizontal lines on your chart. But the reason you put all that stuff on there, and I mean, you don't necessarily have to leave it all up, and make your chart all messy and hard to read. But you put it up there to see what are my areas of confluence. And then now, you can go in and use those areas of confluence and then wipe other things off and just, plot the major ones on there. Things where you see like 3 or 4 things lining up. And when you see things break, you also got to, as you're going forward, you'll learn how to do this, and we'll talk about this. But, whenever things, break on significant volume, then you're going to want to go in and get rid of, old levels. So when it's sort of been at a certain point, like that level's been invalidated, it's been broken, it didn't even respect that level, whatever, then, you can update that. But it went through here, it broke this, it went down here, and so you can start updating these lines. It takes a little practice, but you'll start seeing it more and more and more. And this really is just an extension of the day trading application of magnet prices, which are heavily discussed in Tommy O'Brien book. So trading the markets. So, but stay there, and we'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. Just a quick recap, review on the news coming up for you. Today also we had, we had a couple other reports. We had several things happening today. One thing I did miss out on there was going into the ISM, and we can look at some of the lower current volatility currency pairs. We'll hop over and look at US yen. Not that it's a low volatility pair, but it's a lower volatility pair on average. More on right here. We go in and we can look at when the report came out at 10 o'clock, and usually the market's pretty flat. We can see the high to low range, 90 minutes before the news. What do we get? We got 61 pips. That's pretty big. What about 60 minutes before the news? Okay, so right there we got about 28 pips, and then 30 minutes before the news. Let's see here. That's the high. The low within 30 minutes, I guess, is right there. About 18. So we are a few pips outside the expected ranges, but stayed pretty much within those expected ranges. Potential butterfly plays on all those. And then as far as today, we're going to have Walt Disney is releasing their earnings. That'll come out at 4 o'clock wire release time today after the close. Retail sales on the Aussies coming out tonight. Usually it's something I do butterfly actually into the trade, But there's been a lot of volatility on the Aussie the last 2 weeks. I'd probably recommend being a little more cautious on a butterfly on that. Tomorrow, don't forget at let's see what in the morning there we're going to have the UK rate statement's going to be coming out, and so you want to be ready for that trade there at 7 o'clock. And the exact release time. Sorry, let me get you the exact time on that. The exact release time for the pound dollar is 7 a.m. Okay, thought so. Just want to make sure. And then the ECB press conference, that's going to come out at, let's see here, 8:30. They'll release their interest rate at 7:45, but the press conference happens at 7:30. That's usually the big mover. And what else do we have here? We'll have the RBA monetary policy statement. Again, something a lot of times on butterfly, but not this time, especially after that 140 pip move earlier this week on their interest rate announcement. And also in the morning tomorrow, you have Vodafone coming out in the NASDAQ there, VOD. So it's pretty high in the market cap. It's in like the top 4 of the NASDAQ. So that's going to be coming out 8 to 9 a.m. So be aware of that one. It'll impact the NASDAQ in the morning. And we have IVPMI on the CAD coming out tomorrow afternoon. Not a big mover, but just something if you are trading the dollar CAD that you want to be aware of. And those are your main news reports. If you want some stats there on the pound dollar, I can give those to you real quick. When the pound comes out tomorrow with its interest rate release, the average move is 85 to 90 pips on pound dollar and on pound yen with an 80% probability of moving 50 pips. So it is a high, good probability straddle trade. On the euro, we got a probability of the euro yen and the euro dollar both moving about 70, a little over 75 pips, both of them, with over an 80% probability of breaking at least 50. So, use those numbers to help you calculate your straddles and to put all the pieces together. And let's see here. And I got a call in from Mike right here in the last part of the hour. I don't even know if Mike's still there. Are you still there, Mike?
Yeah. Yeah.
Mike, I'm so sorry. I was trying to wrap up. Will you call me back tomorrow?
You bet.
All right, man. Let's go through it. You bet.
All right.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
You're watching Tiger TV.